This was the most consequential earnings week of 2026. Four of the world's largest technology companies reported. The verdicts are in, and they could not be more different. Microsoft turned its enterprise AI thesis into cash. Meta delivered ad growth, but bled margin. Amazon confirmed the cloud thesis. Apple set a revenue record, then missed where it mattered most. Here is the one-sentence summary of the entire week. The market rewarded proof of AI returns and punished spending without proof. Microsoft surged roughly 8% after Azure grew 43%, its fastest pace since 2022. Meta fell 9.3% after missing earnings per share estimates and raising investor concerns about rising AI spending. Amazon was up over 8% on strong AWS results. Apple fell 3% to 4% despite reporting record revenues of $109.42 billion, mainly due to a greater China revenue miss and a miss in high-margin services. And while all of this was happening, something broke out in South Korea that most Canadian investors missed entirely. That story is in Segment 3, and it connects directly to the AI infrastructure theme that defined this entire week. This is your complete July 31st market roundup. Let's go through it. Microsoft, the clear winner of earnings week. Microsoft posted $90.01 billion in revenue, up 17.75%, with Intelligent Cloud driving $39.31 billion at 32% growth. Azure alone grew 43% and crossed $100 billion in full-year revenue for the first time. Copilot passed 30 million paid seats. Satya Nadella framed the quarter as execution, saying customers are turning tokens into business results. Commercial remaining performance obligations jumped 84% to $678 billion of contracted future revenue. This is the specific proof the market had been demanding. Azure at 43% growth, beating the roughly 40% analysts expected, shows that enterprise customers are actively adopting AI tools and paying for the cloud capacity to run them. The $678 billion commercial backlog means this revenue is contracted, not speculative. Microsoft did not just report strong numbers. It answered the question that has been hanging over every tech earnings call this season. Is anyone actually paying for AI? The answer from enterprise customers is yes, at scale. The stock surged approximately 8%, recovering a meaningful portion of the 31% drawdown it had been sitting in heading into the report. Amazon confirmed the cloud and AI thesis. Amazon also reported strong AWS results, and the stock rose more than 8% Thursday. AWS growth accelerating from 28% in Q1 confirms that the cloud demand environment is strong. The AI infrastructure build-out is generating real workload growth on the major cloud platforms. Amazon's results, alongside Microsoft's, deliver a clear verdict. The two largest cloud providers are seeing accelerating demand from AI workloads. The spending is generating revenue. Meta, the week's biggest loser. Meta platforms fell 20% since July 15th. Revenue beat estimates at $60.80 billion, up 28% year over year. But what soured the reaction was a mix of an earnings miss, EPS of $6.18 versus a $7.22 consensus, tied to legal and severance charges, and a CapEx number that keeps climbing. Guidance has moved 3 times since spring, most recently to $130 billion to $145 billion for the year, and free cash flow for the quarter came in under $1 billion once lease payments were counted in. The ad business is genuinely strong. Ad impressions up 14%. Price per ad up 12%. But the market is not punishing Meta's advertising. Investors aren't punishing Meta's ad business. They're punishing what it costs to run it. The more interesting wrinkle is what Meta didn't lean into. Reports before earnings had Zuckerberg's team in early talks to lease up to $10 billion of AI compute to Anthropic, a potential new revenue line that would have given the market exactly the kind of proof point it wanted. Meta did not announce this deal. Without that revenue proof, the capex increase had no offsetting narrative. Stock fell approximately 9.64%. Apple. Record revenue. Complicated story. Apple reported record revenues of $109.42 billion, plus 16% for fiscal Q3 2026, a 29% increase in EPS to $2.02, and double-digit growth in all regions and sectors. Despite the positives, the stock fell 3% to 4% after hours, mainly due to a greater China revenue miss of $18.8 billion versus the expected $19.6 billion, and a miss in high-margin services at $30.74 billion versus $31.22 billion. CEO Tim Cook stated that Mac and iPad prices will increase due to memory shortages and that iPhone prices may increase in the future. This was Tim Cook's final earnings call as Apple's CEO, a historic moment. The memory shortage, he flagged, is the same global semiconductor story breaking in Asia today. While Canadian investors were watching Microsoft and Meta, the most dramatic market event of July 31st happened 13,000 kilometers away. The Kospi closed July 31st at 6,595.45, up 17.91%, the largest single-day gain in its history. SK Hynix hit the 30% daily limit. Samsung gained 27%. South Korea's chip exports grew 199.5% in June. What drove this? A global memory chip shortage. The same shortage Tim Cook flagged when he warned that Apple's Mac and iPad prices will increase. The AI infrastructure build-out requires enormous quantities of high-bandwidth memory, HBM chips, to power data centers. SK Hynix and Samsung are the world's dominant suppliers. As AI data center build-outs accelerated through 2026, HBM supply could not keep up with demand, pushing prices sharply higher and making Korea's semiconductor companies extraordinarily profitable. CXMT surged 531% on its Shanghai debut, becoming China's most valuable listed company at $487 billion. Q1 revenue grew 719%. Apple is testing its chips. This is the AI infrastructure story from the supply side. Microsoft and Amazon are the demand side, building data centers and paying for cloud compute. SK Hynix and Samsung are the supply side, making the memory chips that fill those data centers. Both sides are confirming the same thesis. The AI infrastructure build-out is real, it is accelerating, and it is creating winners across the entire semiconductor supply chain. The Canadian angle, Canadian investors with global equity exposure through XEQT hold Korean equities within the international allocation, approximately 1.2% to 1.5% of the portfolio. The direct impact is limited. The indirect impact, confirmation of the AI infrastructure thesis that supports Microsoft, Amazon, and the entire semiconductor supply chain, is more significant and benefits the U.S. equity allocation in XEQT directly. The TSX this week. The S&P/TSX Composite Index edged higher. Thursday, trading above 35,000, supported by gains in financial and mining stocks. Financials advanced with RBC, TD, CIBC, and Scotiabank up about 1% each. Gold prices rose, lifting miners, with Barrick and Franco-Nevada gaining nearly 1%. Technology stocks were mostly lower, with Shopify down 3% and Constellation Software losing nearly 4%, tracking weakness in U.S. software application shares after Meta's guidance disappointed investors. In contrast, Celestica surged 6%, following a rally in U.S. chip makers. This is the Canadian market telling its own version of the earnings week story. Financials and commodity producers, gold, energy, were the TSX's stability. Technology, particularly Shopify, bore the drag from Meta's miss. Celestica, with its semiconductor exposure, captured the AI supply chain rally. The BOC minutes, a significant development. Minutes from the Bank of Canada's July 15th policy meeting showed policymakers were divided over the sustainability of the economic recovery. This is a new and important signal. The BOC held unanimously at 2.25% on July 15th, but the minutes reveal internal division on whether the recovery is durable enough to keep rates on hold or whether the tariff-weakened economy warrants cuts. Divided policymakers heading into a September 2nd decision means the September outcome is genuinely uncertain, and the economic data between now and September 2nd, including the next CPI and GDP prints, will be decisive. PM Carney on oil exports. Prime Minister Mark Carney downplayed the possibility of restricting oil exports to the U.S. as leverage in trade negotiations. This removes one tail risk for Canadian energy producers: the possibility of a retaliatory oil export restriction that would have been economically damaging. Energy stocks responded positively. For your XEQT portfolio, this week illustrated exactly why XEQT's geographic diversification matters. The U.S. portion benefited from Microsoft and Amazon. The international portion captured Korea's semiconductor surge. The Canadian portion held steady through the TSX's defensive mix of financials and gold. No single country or sector dominated. That is diversification working as intended. The key developments to watch next week. 1. September 2nd, BOC decision context. The minutes revealed division. Every piece of Canadian economic data between now and September 2nd, CPI, GDP, employment, becomes more significant. Watch for July CPI data, typically released mid-August. A surprise increase reinforces the hold. A surprise decrease opens the door to a cut. 2. U.S. tariff situation, August 19th deadline. The 50% tariff on specific Canadian goods and the 10% forced labor levy both take effect August 19th unless negotiated away. 3 weeks remain. PM Carney's "everything is on the table" posture continues. This is the single largest external risk to Canadian markets heading into August. 3. Canadian earnings continue. Canadian Natural Resources and Fairfax Financial reported after close July 30th. Watch for results from major Canadian banks reporting in August. They will give the most direct read on how the Canadian economy is holding up under tariff pressure and mortgage renewal stress. What to do? If you hold XEQT or VEQT, nothing changes. This week validated the diversified global approach. Microsoft's Azure result was a significant positive. The Korean semiconductor surge was a bonus. Meta's miss was buffered by the rest of the portfolio. Stay invested. Continue contributions. If you hold Shopify, the stock fell 3% Thursday on Meta contagion, not Shopify's specific news. Shopify's own fundamentals have not changed this week. If your thesis is intact, the pullback is noise. If you are watching the BOC for your mortgage renewal, the divided minutes are important. A September cut is now more possible than the July 15th unanimous hold suggested. Do not lock in a 5-year fixed before September 2nd if you have flexibility. Wait for the decision. This was the week that answered the biggest question in markets. Is AI spending generating real returns? Microsoft said yes. Azure up 43%, $678 billion in contracted backlog, 30 million paid Copilot seats. Amazon said yes. AWS accelerating. The supply chain said yes. South Korea's historic plus 17.91% day on memory chip demand that AI created. Meta said not yet. Ad business strong, but $130 to $145 billion in capex with EPS missing and free cash flow collapsing. Apple had its own story. Record revenue, but China and services missed, and memory shortages will raise device prices. The BOC minutes revealed division. September 2nd is now genuinely uncertain. August 19th is the tariff deadline. Canadian banks report in August. 3 big things to watch in the next 3 weeks. Your portfolio did what it was supposed to do this week. Stay the course. Come back Monday.